Hello everyone, here we will be solving an example wherein balance as per cash book, that is your books of accounts, bank account in the books is debit balance, and we will be preparing a bank reconciliation statement and finding the balance as per bank statement. Let's see the example first. Mr. Vijay has a business of trading in electrical appliances. Bank balance as per cash book is 5,50,000 debit on 31st March 2019. So 5,50,000 debit means it's a ordinary balance as per your bank account. Prepare bank reconciliation and find the balance as per bank statement. First, check of rupees 40,000 issued to Mr. Kamal but not presented for the payment. Second, check of rupees 60,000 received from Messrs. Meghna Limited. The same is deposited in the bank but not cleared. Third, bank has charged rupees 1,000 as service charges. The same are not recorded in the bank account as per books. Fourth, Mr. Somnath has deposited rupees 25,000 directly in the bank account, but it is not recorded in the books of accounts. Fifth, interest received credited in the bank statement rupees 7,000 but not recorded in the books of account. Now, this is a format of bank reconciliation statement. Bank reconciliation statement as on 31st March 2019. As we had discussed earlier, bank reconciliation statement is as on a particular date or to be specific at a particular point of time. So we have particulars, amount. Now let's see the first transaction. Check of rupees 40,000 issued to Mr. Kamal but not presented for payment. So we will be preparing a working notes to find out what is the effect of this transaction on bank reconciliation statement. Let's prepare. To understand the impact of the transaction, we are preparing a working note for transaction number 1. So this is our cash book, or you can also say bank account as per your books, and this is our passbook, or you can say bank statement. Now let's assume some balance. Now since there is a debit balance in the cash book, in working note we will be assuming that balance as per cash book is 1 lakh and the same balance appears in the passbook 1 lakh. Now this balance, any amount you can take, but it's better to take a round figure. We just want to know the impact of that transaction on cash book and passbook. That is why we have to take some amount as a balance. Now the transaction is check of rupees 40,000 is issued but it is not yet presented for payment. So check is issued. Now this is debit side, this is credit side. Passbook, this is debit, this is credit. 40,000 is issued, so it will be on the credit side of your cash book, but it is not presented for the payment, so it is not appearing in the bank statement or passbook. Now if you see, after this transaction the balance as per cash book is 60,000. As per passbook the balance is 1 lakh. Now in bank reconciliation statement we are bridging the gap between the cash book and the passbook. Here there is a balance as per cash book and balance as per passbook is not given. We have to find out. So we are moving from cash book to bank book. So we have to add 40,000 in bank reconciliation statement. Let's do that. Now this is a bank reconciliation statement. First we will be writing the balance as per cash book 5,50,000. Now we have to add. So add check issued but not presented for payment 40,000. Next, second, check of rupees 60,000 received from Messrs. Meghna Limited. The same is deposited in the bank but not cleared. Now the check has been deposited in the bank, so it is recorded in our cash book, but same is not cleared. So let's prepare one working note for this. Transaction number 2, cash book, passbook. Let's assume some balance. Let's take 1 lakh. Debit as per cash book, 1 lakh credit as per passbook. Now, check deposited but not cleared, 60,000. So, check is deposited in the bank. So, it will be recorded in the cash book. So, 60,000 debit in the cash book. Now, it is not cleared. So, it won't appear in our passbook. So, balance as per cash book is 1,60,000. Balance as per passbook is 1 lakh. Now we have to move from cash book to passbook. So we have to reduce 60,000 in bank reconciliation statement. So basically, bank reconciliation statement is bridging the gap of balance between the cash book and passbook. In this case, we are given balance as per cash book and we have to find out balance as per passbook. That is why we are moving from cash book to passbook. Now let's write this transaction in bank reconciliation statement. Now we have to reduce 60,000. So less check deposited but not cleared, 60,000. Now the next transaction. 3. Bank has charged rupees 1,000 as service charges. The same are not recorded in the bank account as per books. So bank has charged 1,000 rupees. So it appears in our bank statement or we can call passbook. But same is not recorded in the cash book, that is bank account as per books. Let's prepare a working note for this. Transaction 3, cash book, passbook. Now, bank has charged 1,000. So, bank has charged, so it will come on the debit side of passbook, bank charges. But same are not recorded in the cash book. So, there is no entry for this in the cash book. So, the balance as per cash book is 1 lakh. Balance as per passbook is 99,000. Now, we have to move from cash book to passbook. So, we have to reduce 1,000. Let's record this. Bank charges debited by bank but not recorded in the cash book, 1,000. Now let's see the next transaction. 4. Mr. Somnath has deposited rupees 25,000 directly in the bank account but it is not recorded in the books of account. So Mr. Somnath, he has deposited the amount directly in the bank account. So it appears in our bank statement. But same is not recorded in our cash book, or you can say bank account as per books. Let's prepare a working note for this. Transaction 4, cash book, passbook. Now, there is a direct transfer in our bank account, that is direct credit. So it is recorded in the passbook. But same entry doesn't appear in the books of account or cash book. So balance as per cash book is 1 lakh. Balance as per passbook is 1,25,000. We are moving from cash book to passbook. So we are adding 25,000. So let's record this transaction in the bank reconciliation statement. Direct deposit in bank account not recorded in the cash book, 25,000. Now the next, Fifth, interest received credited in the bank statement rupees 7,000 but not recorded in the books. So we have received some interest, it has been credited in your bank statement, but the same is not recorded in the cash book. Let's prepare a working note for this. Transaction 5, cash book, passbook. Now, interest has been credited in the bank statement. So, on the credit side, write 7,000 in the passbook. Cash book, there is no entry. So, balance as per cash book is 1 lakh. Balance as per passbook is 1 lakh 7,000. So, we are moving from cash book to passbook. So, we will be adding 7,000. Let's write this in our bank reconciliation statement. Add interest credited by bank not in the cash book 7,000. So these were the transactions which will impact our bank reconciliation statement. Now let's find out the balance as per bank statement as on 31st March 2019. So these are the transactions which are to be added. This have to be reduced. So 40,000, 25,000 plus 7,000, 72,000. 60,000 plus 1,000. So 61,000 we have to reduce. So 5,50,000 plus 72,000 minus 61,000, that comes to 5,61,000. So this is balance as per passbook or bank statement. So this was about the example of bank reconciliation statement wherein your balance as per cash book was a normal debit balance, and we prepared a bank reconciliation statement to find out balance as per bank statement on that particular date.